Hi friends, in the previous video we have seen two simple concepts, that is how GST is formed and what is the dual GST model that we have. Now let's see what are the major features of indirect taxes. So you can see that information in page number 1. So as you all know that indirect tax in comparison to income tax or direct tax, so is having regressive in nature. What is it regressive in nature? So a direct tax is progressive in nature, whereas indirect tax is regressive in nature. Progressive means so person who is earning higher income is required to pay higher income tax, whereas a person who is earning lower income is required to pay lower income tax. That is known as progressive in nature. Whereas regressive means irrespective of the money that they are earning, they will be paying the same amount of tax. So that is known as regressive in nature. For example, you are buying one biscuit packet, and you may be of any class, you may be rich or you may be poor or you may be middle class, but the amount of GST that will be levied will be same. So there is no difference in that. That is known as regressive in nature. So therefore, so these indirect taxes will be regressive in nature and creates income disparities. Okay. So whereas direct tax is not like that, direct tax is progressive in nature. Then one more difference that we need to know is that indirect tax is computed on the gross amount, whereas income tax or direct tax is computed on the net amount. For example, I am a chartered accountant and I get some fees, consulting fees. So this fees on which I need to pay GST, and after that I need to reduce my expenses and I need to ascertain the profit. On that profit I will be required to pay income tax. Same way there is a trader. So trader is engaged in sale of goods. So when he sells goods for some 10,000 rupees, on the 10,000 rupees he need to pay GST, indirect tax, and from the 10,000 he need to reduce his purchases and other costs, and there will be some profit. On that profit they will be paying income tax. Like that, any person, so there will be both income tax as well as indirect tax on the gross amount. Gross amount means so the gross revenue or gross receipt, sale revenue, etc. On that GST will be payable. On the net amount means after reducing the expenses, so income tax is payable. That is this. So tax is on income, but revenue from sale of goods or services. Okay, so tax is not on income but on revenue. But which tax? Indirect tax. So but income tax is on income. So revenue and income, what is the difference? Revenue is gross collections, whereas income is revenue minus expenses. Okay, and you all know that indirect tax is one of the major source of revenue to the government. So tax itself is a major source of revenue. In the tax, between direct tax and indirect tax, which is having more revenue, indirect tax contributes more revenue to the government. That is this. Okay, then you all know this point also, that in case of indirect tax, liability is on one person and burden is on the other person. So as for example, if I am charging some GST to you now. So these lectures you are purchasing. When you are purchasing these lectures, some amount plus GST I am charging from you. So now this GST what I am collecting from you, I need to pay to the government. So burden is not on me. So liability is on me, but the burden is not on me. I am intending transferring the burden to you. Okay, and wider tax base as more number of people are covered. Yes, because income earning people, that is those who pay income tax, because in income tax there is a exemption limit of 5 lakhs. So lot of people are covered under that category, whereas beyond that only they are required to pay income tax, and the percentage of population who pay income tax in India is very, very less. Whereas indirect tax, if you see, there are lot of taxpayers in indirect taxes. So therefore, wider tax base as more number of people pay indirect tax than direct tax. Okay, and next thing is that it promotes social welfare as high rates of tax are levied on tobacco products, etc. So, but actually that is not true, because Just because there is high rate of tax on tobacco, etc., it does not mean that the consumption of that product will come down. Correct? Practically, if you see, so because the cigarette price has been increased from 2 rupees to 3 rupees or 5 rupees to 10 rupees, people are not bothered. So if they want to consume, they will consume. Like something we would have studied in foundation, price inelastic. So like irrespective of the price, the consumption will happen. So like that, so who is today bothered about the price of the tobacco and all? So definitely if the price increase also because of taxes, they will not mind and they will definitely consume. But I don't know how it will create social welfare and all, but that is also one of the point. So that is with respect to major features of indirect taxes. Even if you get a question, distinguish between direct tax and indirect tax also, you can write this. Okay. Now, what are the various indirect taxes we already studied? What is the major indirect taxes that we have at present? Only two major indirect taxes, that is GST and customs duty. But we have other indirect taxes as well, levied by state government and local authorities. Okay. Now, we have even this aspect, we have completed excise duty, customs duty, service tax, etc. and milestones in implementation of GST in India. So, what is the effective date of implementation of GST in India? We all know that. What is that? 1/7/2017 is the effective date of implementation of GST in India. But the GST implementation required a constitution amendment. So, as per constitution, 7th schedule to the constitution is having 3 lists: union list, state list and concurrent list. Which schedule to the constitution? 7th schedule to the constitution is having 3 lists: union list, state list, concurrent list. Union list where central government is having power to make law. State list where state government is having power to make law. Concurrent list where both central government and state government is having power to make law. And in the past, so certain taxes were levied by central government only and certain taxes were levied by state government. Under concurrent list, we did not have any tax related entries. Okay. So, these tax related entries were there only in union list and state list. Now, because of the implementation of GST, as GST is a dual tax system, both central government and state government parallelly levy GST on the common tax base. That is what we learnt as dual GST model. So, which means that, so we need to keep the same aspect in union list as well as state list, because now both central government and state government parallelly will levy GST now. So, there was a requirement of constitutional amendment due to this reason. So, this constitution amendment bill was presented in 2014. So, in the year 2014, Constitution Amendment Bill 2014 was presented and it became Act in 2016, which means, so 2014 we presented the bill and it became Act in 2016, okay, Constitution Amendment Act 2016, and in 2017 GST is implemented. So, therefore, do not get confused. So, when the Constitution Amendment Act has happened? 2016, not 2017, and the bill wise it is 2014. Also, the number you need to remember. So, Constitution 122nd Amendment Bill. So, you need to remember this Constitution 122nd Amendment Bill. Okay. So, Constitution 122nd Amendment Bill, whereas Act wise if you see Constitution 101st Amendment Act 2016. So, bill wise it is 122nd, bill wise it is 122nd, but Act wise it is 101st. Okay. So, therefore, means like not every bill that is presented in the parliament got passed. So, that is the reason why bill wise it is 122nd, but Act wise it is 101st Act. And 1/7/2017 is the effective date of implementation of GST across the country. Then, which was the first country to implement GST? France. In 1954 itself, France became the first country to implement GST. So, GST is not something which is there only in India. So, before India, approximately 160 countries have implemented GST. Okay, so this GST is not something which is there only in India. So there are many countries where GST is implemented. So France was the first country to implement GST, and around 160 countries across the globe are having GST. And as I already told you that GST is a dual system. Now we need to understand what are the various types of GSTs that we have. For that, we need to know the taxable event in GST. What is taxable event means? Taxable event means the event on happening of which the tax shall be levied. That is known as taxable event. And already I told you, in case of excise, what was the taxable event? Manufacture. In case of service tax, what was the taxable event? Provision of services. In case of CST, what was the taxable event? Interstate sale. In case of value added tax, what was the taxable event? Intrastate sale. Okay, like that. So even in customs duty, what was the taxable event? So import or export. What is the taxable event in case of GST? Supply of goods or services or both. So what is the meaning of this supply? It is defined in section 7 of CGST Act. That is our next chapter. In segment 2, we will be learning about supply, section 7. Okay, but right now, so try to understand that the taxable event is supply of goods or services or both. This supply is divided into two: intrastate supply and interstate supply. You can see this information in page number 6. In page number 6, you can see the information about intrastate versus interstate supply. So what is a taxable event under GST? So the taxable event in GST, is supply of goods or services. Okay, so supply of goods or services is the taxable event. So this supply is divided into two. What is that? This supply is divided into interstate supply and intrastate supply. What is the difference between interstate supply and intrastate supply? It is not, one state to another state means interstate, within the state means intrastate, like that we cannot take. So we have two factors which determine whether a supply is interstate supply or intrastate supply. That is location of supplier and place of supply. These are the two factors. Location of supplier and place of supply are the two factors which determines whether a supply is interstate supply or intrastate supply. Okay. Now, what is the general meaning of location of supplier? What will be taken as the location of supplier? Suppose if they are providing some services or supplying goods from the registered place, that registered place will be taken as the location of supplier. Suppose if they have a registered place, but they are doing business in a fixed establishment, so that fixed establishment or business establishment will be taken as the location of supplier. In the absence of that, the usual place of residence, for example online classes etc. and all, the usual place of residence will be taken as the location of supplier. Okay, so you just write down below. So what will be taken as the location of supplier? So location of supplier is registered place or fixed establishment, okay, or usual place of residence, is known as location of supplier. Okay, so depends. So suppose if they are doing business from the registered place, that registered place. Suppose if they are doing business from a fixed establishment elsewhere, so that fixed establishment, or in the absence of that, the usual place of residence is the location of supplier. Then what is place of supply? Place of supply is a technical factor that depends upon the transaction. We have different place of supplies. Some transactions, location of recipient will be taken as place of supply. Some cases, location of supplier. some cases location where service are actually performed, some cases location of immovable property. Like that, there are various factors for the purpose of place of supply. So place of supply is not always the same. So place of supply depends, okay, and this place of supply we have a special chapter in the new syllabus. So if you see the index, you can find we have a dedicated chapter for place of supply. So segment number 15, place of supply we have. So there we will be learning for which transaction, what is the place of supply, etc. and all. So therefore, then we will know whether it is intrastate supply or interstate supply. Simple here. If the location of supplier is Tamil Nadu, place of supply is Karnataka, then what is the nature of supply? So it is interstate supply. So because if location of supplier and place of supply is in two different states or two different union territories or a state and a union territory, then it will be known as interstate supply. If location of supplier and place of supply is in the same state or same union territory, then it will be known as intrastate supply. Clear? Location of supplier and place of supply, same state or same union territory, intrastate. Location of supplier and place of supply, so is in two different states, two different union territories, a state and a union territory, then it will be known as interstate supply. Okay. Now, what is the type of GST that will be applicable in case of intrastate supply? Intrastate supply, the two in the same state, the type of GST is CGST and SGST. Suppose if it is within the same union territory, the type of GST will be CGST plus UTGST. Okay. What is the full form of CGST? Central Goods and Services Tax. SGST, so State Goods and Services Tax. UTGST, Union Territory Goods and Services Tax. Okay. So now, whenever the transaction takes place within the state, that is, if the location of supplier and place of supply is in the same state, then the type of GSTs will be CGST plus SGST. If the location of supplier and place of supply is in the same union territory, then it will be CGST plus UTGST. Okay. Whereas in case of interstate supply when if location of supply, place of supply, two different states, two different union territories, a state and a union territory, then it will be interstate supply. In that case, the type of GST will be IGST. IGST full form is Integrated Goods and Services Tax. So therefore, what are the different types of GSTs that we have? CGST, SGST, UTGST, IGST. Who will levy CGST? Simple, central government. Who will levy SGST? State government. Who will levy UTGST? Central government only, because union territories are under whose control? Central government. So UTGST is levied by central government. When CGST is also levied by central government, UTGST is also levied by central government, then what is the need of having the same GST? Okay, like same government. So instead we can have single name. Now why we need to have CGST, UTGST separately? Because how much is the contribution of union territories needs to be separately accounted. That's why, because CGST is the summation of GST collected across all the states, because in every state the GST will be common, CGST. Even perhaps in union territory also that will be common. But the UTGST is like union territory contribution. For that reason, they have created a separate accounting head, that is UTGST. Then, so CGST levied by central government, SGST levied by state government, UTGST levied by central government. What about IGST? IGST is also levied by central government only. Okay. Then when it will be levied? CGST is levied on intrastate supply, SGST intrastate, UTGST intrastate, and IGST on interstate supply. Okay. So that is the information which I have given in the next page. Okay. So CGST by central government on intrastate, SGST by state government on intrastate, IGST on interstate, so by central government, UTGST on intrastate levied by central government. Okay. Now, in case of IGST, we need to know one aspect. So whenever IGST is collected by central government, so the dual tax model is not prevailing, because if it is intrastate supply, we have a dual model, CGST, SGST. Even in case of Union Territory, CGST, UTGST. But here there is only one GST that is collected by central government. So, but India is following dual tax model, which means completely this IGST cannot be retained by the central government. Then what they need to do? They need to share 50% with the consuming state. Okay. So 50% they cannot retain, 50% they need to share with another state. With which state they will be sharing? So let's try to understand this with an example. So there is a supplier who is located in Tamil Nadu. There is a supplier who is located in Tamil Nadu, and there is a recipient, and this recipient is located in Karnataka. Okay, supplier located in Tamil Nadu, recipient located in Karnataka, and supplier is making supply of goods or services to the recipient, and the place of supply is also Karnataka. Means the location of recipient is taken as place of supply. Okay, place of supply is location of recipient. Now the supplier is making some supply of goods or services, supply of goods or services, and for which the recipient has to pay what? Price plus which GST depends upon whether it is intrastate or interstate. It is what? Interstate. Why interstate? If the location of supplier and place of supply is in two different states, then the type of GST will be, the type of supply will be interstate supply, and the type of GST will be IGST. Okay. Now this IGST is collected by the supplier from the recipient. Now supplier will pay this IGST to which government? Central government. So to central government, the supplier will pay IGST. Up to this clear? Now this IGST, can it be fully retained by central government? No. So what is the sharing ratio between central government and state government? In dual GST model, both central government and state government are equal partners, which means central government will get 50% and state government will get 50%. For example, you are paying 18% as GST. In that 18%, 9% will go to central government and 9% will go to state government. Okay, like that. Okay. So central government IGST will be applicable, and here we are dividing that into two. Okay. So 50% of IGST, 50% of IGST will go to whom? 50% of IGST will go to central government. Okay. 50% of IGST will go to central government, retained by central government, and next 50% is there na, that 50% of IGST is given to state government. Which state government? Because there are two state governments here, Tamil Nadu and Karnataka. To which state government it will be given? Consuming state. What is a consuming state? Karnataka. So therefore it will be given to state government of Karnataka. So that is consuming state. Consuming state. So that's the reason why GST is called as destination based consumption tax, because whenever there is a interstate supply, so that GST will not be given to the originating state, but it will be given to the destination state. So therefore GST is destination based consumption tax. Destination based consumption tax. Okay. Now this information only I have highlighted here. You can see in page number 7, IGST for interstate supply levied and collected by central government, but 50% is shared with consuming state based on place of supply. Okay. Now here, because of this, there is one disadvantage. To whom? to the producing states. How there will be disadvantage? Let's take Tamil Nadu, then Maharashtra, Gujarat and Karnataka as examples. These states, there are a lot of production that happens. These are producing states, whereas the other states are consuming states, wherein whatever goods which are manufactured in Tamil Nadu will be consumed in Kerala, Andhra Pradesh, Telangana, even Karnataka. So therefore, goods which are manufactured in one state will not be consumed in that state, will be consumed in other states. Now in that case, what will happen? To the producing states, there won't be much revenue. How? Simple. So whenever cars, you take cars which are manufactured in Tamil Nadu. So in Tamil Nadu, there are a lot of car manufacturing companies, okay, and these cars which are manufactured in Tamil Nadu, will it be sold in Tamil Nadu only? Not necessary. It will be sold in other states. Even Gujarat you take. Gujarat state is known for industries. Lot of industries are there in Gujarat and Maharashtra. Will the goods be sold only in Gujarat and Maharashtra? No, the goods will be sold in other states as well. Then in that case, so whenever the goods are sold to other states, it will become interstate supply. When it becomes interstate supply, 50% of the GST will go to, IGST will go to central government, remaining 50% will go to the consuming state, then for the producing state there won't be anything, correct? But in the past, there used to be central sales tax in this situation. When the goods are manufactured in Tamil Nadu and sold in Andhra Pradesh or Telangana or Karnataka, in the past, it was central sales tax. Central sales tax was levied by whom? Central government, collected and retained by the state. Which state? We already learned that. CST, even though levied by central government, but it will be collected and retained by the state government. Which state government it will be retained by? By the originating state. What is that originating state in this example? Tamil Nadu. So goods which were manufactured in Tamil Nadu, the entire CST was going to Tamil Nadu only. Okay, so originating state was getting the benefit. But now under GST, what has happened? 50% will go to central government, remaining 50% will go to the consuming state, then the originating state will not get anything, because of which there will be loss of revenue to the originating states. And many producing states did not agree to this, and they went and so objected the implementation of GST with the central government. Now central government started convincing them. See, you take service tax. Service tax previously was collected by central government. Now whenever there are services, so now we are levying GST. In the GST, you will get 50%. No, previously excise duty was collected only by central government. Now that excise duty got subsumed into GST, so you will get 50%. No, then what is your problem? But even then, you cannot compare goods sector with service sector, because the service sector is small. The turnover, if you see, goods turnover is only big, service turnover is small. So due to that reason, what will happen? So definitely there will be some loss, so that the originating states will get. They said no, they are not convinced with this. So finally, central government did not have any other go. They need to convince the state government for implementation of GST, because for central government it was a biggest milestone. So that's the reason why what central government did, they promised the state government, okay, don't worry, if there is any loss of revenue to you on account of implementation of GST. So who is talking this? Central government is speaking this to the state government. If you, state government, is having any loss of indirect tax revenue on account of implementation of GST, so that loss of revenue will be compensated by us. Like that, they gave an assurance. Who gave an assurance? Central government gave an assurance. So you take some base year revenue. Okay, what was the base year revenue? Some 2015-16 revenue you take. So from the 2015-16 revenue, indirect tax revenue for the state government, you add a growth rate of 14%. Every year you add 14%, 14%, 14%, 14%. That is your expected revenue. Now see what is your actual revenue because of GST. You see the difference. If there is a loss from the expected revenue to the actual revenue, that is actual revenue is less than expected revenue, that difference amount we will compensate to you. Like that central government gave assurance to the state government. Now state governments are happy. Okay, fine. So whenever there is a loss of revenue, you said you will be compensating to me, and that too for how many years it will be compensated? 5 years from the date of implementation of GST, and it can be extended for a further period, so as decided. So therefore now state governments are very much happy. Superb. Well, go ahead for implementation of GST. And after implementing GST, what central government did? So they have enacted one law, GST Compensation to States Act 2017. For what purpose? For the purpose of collecting GST compensation cess. So actually who gave a promise to whom? Central government gave a promise to the state government, stating that if there is any loss on account of implementation of GST, that loss will be compensated by central government. Then central government should pay out of their pocket na. But you know what is the reality? So they are levying GST compensation cess on some notified goods which are being sold in India. On that notified goods, they levy compensation cess, and they are collecting that compensation cess, and they are giving the compensation to the states. Not that central government is paying out of their pocket. Ultimately, the sufferer is the general public only here. So they are collecting from the public in the form of compensation cess, and they are paying it to the state governments. So those state governments where there is loss. But are they collecting from the people of those states only to which they are paying? No. Across the country, on every sale of notified goods, they are levying compensation cess, and the revenue what they got by way of compensation cess, they are giving to the states which are having loss on account of implementation of GST. Okay. Now, what are the examples of goods for which we have compensation cess? So let's try to understand about this compensation cess. So therefore, if you add compensation cess also, what are the various types of GSTs that we have? 5. CGST, SGST, UTGST, IGST, and compensation cess. The information related to compensation cess I have given below. You can see this information in page number 23. You can see this information in your book in page number 23. GST Compensation to States Act 2017. Okay. So what is the purpose of this compensation cess? Whenever there is loss of GST revenue to the states. Okay. So to compensate to the states for the loss of revenue. So to compensate to the states for the loss of revenue arising on account of implementation of GST, we have this GST compensation cess. Whether it is levied on intrastate supplies or interstate supplies or both. It is leviable on intrastate supplies and interstate supplies, both. Okay. But with respect to what? All goods or notified goods? Only notified goods. So you can see the list of notified goods: pan masala, tobacco and tobacco products, coal, aerated waters. What is it? Aerated waters? All sodas, Pepsi, Coke, 7-Up. So these aerated waters. Motor vehicles and motor cars. On that also there is compensation cess. And you know what? On motor vehicles, the compensation cess is there, which is a very big amount. For example, you are buying one SUV. Okay. You are buying one SUV here. So what will be the price of an SUV? So price of one car will be, say, somewhere 10 lakhs excluding GST. So SUV and all, so easily 10 lakhs. Okay. Some normal mid range. Okay. 10 lakhs. On the top of that, we have GST at 28%. GST 28% means that comes to what? GST 28% means 2,80,000. Then compensation cess is there. Compensation cess is how much? Compensation cess is 22%. On SUVs, the compensation cess is 22%. 22% means what? 2,20,000. Now, what happens to the price of the car? The price of the car went to 15 lakhs. Okay. In this 15 lakhs, that 5 lakhs is purely because of tax. This entire 5 lakhs is purely because of the tax. Okay. Which means when you buy a SUV, there is one budget car inside the SUV. Because for 5 lakhs, you will get one budget car like Alto or Renault Kwid, etc. So that car is inside the SUV. Means that much. So for you are paying 2 cars price for 1 car. Okay. So this 5 lakh rupees government is collecting here. In that compensation cess, GST okay, compensation cess, then automatically the sales of cars have come down. So reason being, people cannot pay this much amount of taxes. See, they will show this is the price of the car, but the reality, if you add all the expenses like GSTs and all, it will go to some other range. On-road price, always you see when you are checking the price of the car, on-road price you see. So this on-road price when you see, you will get to know what is the price of the car. So GST and all if you add, so it will touch somewhere. Okay. So that is the reason why many car manufacturers have stopped the production and they have reduced the production, and Ford company has left the country itself. Okay. So they understood that it is not working out in India. So it's better to manufacture outside India, and if required, they will be selling it to India if any person wanted this. So therefore, it is very simple for them, and that's the reason why lot of automobile sectors have reduced the production. That's why today, if you need a car, no, there is a huge waiting time. Like you will not get immediately. So 6 months, 9 months, sometimes 12 months, you need to wait to get a car delivery. Okay. That is with respect to this, and therefore, compensation cess is not levied on all goods, only on some notified goods. Are these the only notified goods? No. These are the illustrative list of notified goods, but we have many other goods as well, but this is just a illustrative list. Okay. And this will be applicable across the country. Means across the country, not only in those states to whom they need to pay compensation cess they will be levying, across the states. So compensation cess may not be payable to some states like Tamil Nadu, Gujarat. Really the point is the revenues have increased, GST revenues have increased. What they thought was GST revenue may not be great, but GST revenue is amazing. So actually there is no compensation that is payable for these states. But even if the transaction is happening in the states, government is collecting compensation cess and they are giving it to some other states like West Bengal, Bihar, etc. and all, wherein there is no GST much collection there, but so compensation is being paid. Actually, lot of places, lot of states are paying a huge price here in the form of compensation cess, and we can't do anything with respect to this. And what is the period for which compensation cess is levied? What I said, 5 years from the date of implementation of GST. So what was the date of implementation of GST? 1/7/2017. From there you count 5 years, 18, 19, 20, 21, 22. Then it was over now by 1/7/2022. Yes, it was over, but it got extended. It got extended for a further period, because I told you period of levy of compensation cess is 5 years from the date of implementation of GST, and can be extended for a further period based on the recommendations of GST Council. So what is this GST Council? So GST Council is the decision making body of GST. So where they will take some key decisions related to GST, and who are the members of GST Council and all we will see later. So this GST Council is having power to extend. Accordingly, this 5 years period got over and they extended the implementation of GST for a further period up to 31st March 2026. You can see that information in the next page, page number 24. So GST compensation cess is extended till 31st March 2026. Sir, will this be the last date? We don't know. We will know this only in 2026. Okay, we will not know now. So if still some states are not getting much GST revenue, so then in that case, compensation cess will be continued to be levied. So I think this is one of the stupid idea, but we can't do anything with respect to that. So as we need to like satisfy the states for implementation of GST, that's why central government did. But in this entire process, the sufferer is who? The sufferer is public, general public. Okay, that's the reason why second hand cars lot of people are purchasing. So because second hand cars means these cars are purchased during the like 5 years before, 5 years, 6 years before. 5 years, 6 years before, we did not have this much of GSTs and all na. So therefore 5 years, 6 years before purchased cars, now people are buying. So 5 years, 6 years, okay, because car will have a life of easily somewhere like 10 years, 15 years and all cars are having life. So therefore 5 years, 6 years before purchased cars and all, now people are ready to pay a big amount for that car, because even I have got this situation in 2013. In the year 2013, I purchased one car, Alto car. So this Alto 800 like that one model was released. So in 2013, I purchased that car. For how much? 3 lakhs I purchased. 3 lakhs I purchased. And now like recently I have upgraded to urban cruiser, another car I have upgraded. So this old car I sold in the year 2022. In the year 2022, I sold the old car, this Alto. Now also Alto model is there. But what is the Alto car price? 5 lakhs. Alto car price, new car is 5 lakhs. But I purchased on road 3 lakhs. But now the car price is 5 lakhs. Same car. And so the second hand car, I have sold it at 1,90,000. So for 10 years, the depreciation is only 1,10,000. So I sold for 1,90,000. People are willing to buy. Why they are willing to buy? Because if they want to buy a new car, the new car will be like 5 lakhs. Whereas for 1,90,000 itself, they are getting this Alto. But it's okay. Hardly I have used it for some around 15,000 kilometers only. Not much. So for 10 years, I did not drive much. So 15,000 kilometers only, and people were willing to buy, and I have sold. I had made a better deal. So why second hand car market has increased? This mainly because of this reason only. Okay. Now that is with respect to this, and how the computation will be made. You can see here that this cess is in addition to GST payable and is computed on the transaction value excluding GST. Already I told you. So that is, while computing compensation cess, we will not add GST. GST is also computed on 10 lakhs and compensation cess is also computed on 10 lakhs. Okay. So while computing compensation cess, no need to add GST. Then next one. So how the compensation is calculated? How the compensation payable to the state government is calculated, you can see in the next page. For example, you take Tamil Nadu. So state is Tamil Nadu state. And what was considered as the base year? 2015-16 considered as base year. And in 2015-16, actual revenue was 800 crores. Now, to this 800 crores, you add 14%. Every year, you will get the projected tax revenue. Okay. So to the actual tax revenue, you add 14%, you get the projected tax revenue, and 912 crores plus 14%, 1040 crores plus 14%, 1185 crores plus 14%, 1351 crores. So this is the projected tax revenue. And you need to see what is your actual tax revenue. That is, what is the actual tax revenue for the state. So that is 900 crores, 1000 crores, 1240 crores and 1314 crores, like that. Now, from when GST is implemented? 2017-18. That to full year? No. So July 2017, which means from July to March. How many months? July, August, September, October, November, December, Jan, Feb, March, 9 months. So whatever is your projected revenue and actual revenue, that is for that state, convert it for 9 months. So 1000 crores into 9 by 12, 750 crores, and 1040 crores into 9 by 12, 780 crores. So what was the projected tax revenue? 780. But how much they got as actual? 750. So what is the shortfall? 30 crores. That 30 crores will be given as compensation by central government to Tamil Nadu state government. Then 2018-19 full year GST is applicable. So what was the projected revenue? 1185. Actual revenue 1240. Is there any shortfall? No. So will there be any compensation? No. And will central government collect any amount from the Tamil Nadu government? No. No. It's like if it is a shortfall, it will be paid. But if you have more money, it will not be collected by the central government. Okay. So then in 2019-20, projected tax revenue was 1351 crores and actual 1314 crores. So what was the loss? The difference is 37 crores. So this 37 crores will be payable as compensation, because when there will be compensation, simple, if the actual amount is less than the projected, so this 37 crores will be payable as GST compensation. Okay, what are the key points that you need to remember? What is considered as the base year? So 2015-16 is considered as the base year. Okay, 2015-16 is considered as the base year. And then what is the growth rate that will be computed? 14% will be taken as the growth rate for every year. And how to compute the GST compensation? So GST compensation is projected tax revenue minus actual tax revenue. Projected tax minus actual tax, that will be taken. Okay, until when they will be paying? At present 31st March 2026, till that year. So they will be making payment of this compensation. Okay, so that's how the compensation will be computed. Okay, and about this input tax credit, so we will be seeing later. Okay, later this discussion will come. And applicability, all taxable suppliers supplying notified goods except composition taxpayers. Who are composition taxpayers? That is, so we have a simplified scheme for payment of tax. Rather than paying tax at the regular rates, people who are opting for composition scheme will be paying tax at reduced rates. For them, this compensation cess will not be applicable. Okay, so therefore for a person or a taxpayer who is paying tax under composition scheme. What is composition scheme? Tax at the lower rate. Okay, we have that as a separate chapter. Composition scheme is a separate chapter. We will be learning about the composition scheme. You can see the index. You will be able to identify. So composition scheme, like that, segment 8 is there. Okay, segment 8 composition scheme. One separate chapter is there. So there we will be learning about composition scheme. So what is that we need to know? A person who is opting for composition scheme is not required to pay this compensation cess. Okay, that is this. All persons supplying notified goods except composition taxpayers should collect and pay this GST cess. So GST compensation cess is not applicable for a person who is opting for composition scheme. Okay, so these are the points that you need to remember with respect to compensation cess. Now we need to know the difference between tax versus duty versus cess. What is the difference? So because in some places we have duty, in some places we have tax, okay, and in some places we have cess. For example, excise duty, customs duty, like that we have. Then tax, so like sales tax, service tax, goods and services tax, like that we have. Then cess, compensation cess, you know, and even we have something called as social welfare cess, and in income tax health and education cess, like that we have something. So what is this difference between duty, tax and cess? That is, all these three are collected by the government. Irrespective irrespective of consideration involved in the transaction, if we have an obligation to pay, that is known as duty. Okay. So, general, I am giving you the general meaning. I am giving you the general meaning of duty, tax and cess. So, what is the general meaning? Irrespective of consideration, irrespective of consideration, irrespective of consideration, if there is an obligation to pay an amount, if there is an obligation, if there is an obligation to pay an amount to government, to pay an amount to government, then it will be called as duty. Example, excise duty. Even today we have excise duty. So, on some goods, even state excise duty, central excise duty, like that we have. You manufacture some goods. Whether you sell those goods or you throw it in Bay of Bengal, you need to pay duty, excise duty. Okay. You sell it or you don't sell it, you have to pay the duty, excise duty. Customs duty. You are importing some goods. When you are importing some goods, so it may be for your own consumption or it may be for further sale. You may be importing it as a trader to sell it, or you may be importing it as a consumer, you want to consume it for your own purpose. Even then you need to pay customs duty. Okay. So, that is an example of duty. Once the event happened, you need to pay. Okay. So, irrespective of the consideration, if there is an obligation to pay an amount to government. Okay. So, example, what is that? On manufacture, excise duty is payable, excise duty is payable even though such goods are not sold, even though such goods are not sold. So, we need to pay duty. Okay. Then what is tax? So, tax is, there will be an obligation to pay only when there is a consideration involved in the transaction. Okay. So, obligation to pay an amount, obligation to pay an amount as and when there is consideration, as and when there is consideration involved in transaction. Okay. Obligation, I have an obligation to pay an amount when, as and when there is consideration involved in the transaction, then it will be called as tax. For example, I am selling goods, I get money, on then only I have to pay tax, but I am giving it free, I don't have to pay tax. Okay. So, that is an example here. Sales tax payable only on sale of goods for a consideration, otherwise we are not required to pay, that is tax. Then what is cess? So, cess will be like whatever money, this is also payable. So, whenever it is levied, we have to pay. Okay. And cess is also like tax, cess is also like tax. But the difference between tax and cess is that whatever money that is collected as tax can be used for any purpose by the government, but whatever is collected as cess should be used only for the purpose for which it is collected. Okay. So, cess same as tax, but it should be used only for the specific purpose, only for the specific purpose, for which it is collected. So we have health and education cess. That health and education cess collected should be used only for the purpose of health and education only. It cannot be used for any other purpose. Same way, compensation cess. That cess collected should be given used only for paying compensation to the states. It cannot be used for any other purpose. So that is the meaning of cess. Okay. So it should be used only for the specific purpose for which it is collected. So example, health and education cess, health and education cess collected should be used only for that purpose. Should be used only for that purpose. Only for that purpose. Okay. So that is with respect to cess. Okay. Now, here we have completed the discussion related to compensation cess. Now you got the clarity about what is duty, what is tax and what is cess. But in case of GST, if you see, what is GST full form? GST full form is goods and services tax. Goods and services tax. Tax means we need to pay only when there is consideration involved in the transaction. But in GST, we have 4 transactions. Generally, we pay GST only when there is consideration. But in 4 cases, 4 transactions, we pay GST even if there is no consideration. So this is something you need to remember. This is like an exception. Generally, in GST, we need to pay GST only when there is consideration involved in the transaction. Okay. So it is payable. It is payable only when consideration is involved in the transaction. Okay. So it is payable only when consideration is involved in the transaction. However, with respect to few transactions, notified transactions, sir, what are those notified transactions? We will be learning in next segment, supply. Okay. However, with respect to few notified transactions, GST is payable even if there is no consideration. Even if there is no consideration, GST will be payable. Okay. So that is with respect to few notified transactions. Okay. Whenever it comes, there I will explain, because you should not think that so only when consideration is there, GST is payable. Yes, that is general. Okay. This is the general rule. Generally. Okay. This is generally. But we have an exception for few transactions alone. So even though there is no consideration, we end up paying GST. Then have a look into this information above. So what is it we have seen? What are the various GSTs that we have? And foreign territory. From foreign territory to a state, when the goods are brought or service are brought, what is it known as? Import. In case of import, we have which GST? IGST. In case of import and export, the type of GST will be IGST. CGST, SGST and all will not come. So in case of import and export, always what is the type of GST that is applicable? IGST. On import and export, the type of GST will be IGST. Whereas this CGST, SGST will be applicable only in case of intrastate or within a union territory, then CGST, SGST, CGST, UTGST. From one state to another state or from one state to another union territory, it will be IGST. So when IGST will be applicable? IGST is applicable in 3 cases. Number 1, interstate. Number 2, import. Number 3, export. In these 3 places, IGST will be applicable. Okay. Now, so here, what are the various union territories, etc., where UT GST will be applicable, so that we will try to understand. We have CGST Act. CGST Act. Who will levy CGST? Central government. Okay. CGST Act. CGST Act 2017. How many CGST Acts we have? How many central governments we have? One. So how many CGST Acts? One CGST Act. Only one CGST Act. Then next. SGST Act 2017. How many SGST Acts we have? How many state governments? SGST levied by whom? State government. How many state governments we have? 28. 28 states. 28 states. How, sir? So Jammu and Kashmir is not a state now. Article 370 of the Constitution got abrogated. Article 370 has given special status to Jammu and Kashmir. They have abrogated that, and Jammu and Kashmir has become a union territory. 2 union territories it has been made. So Union Territory of Jammu and Kashmir, Union Territory of Ladakh. Okay, so they made this Jammu and Kashmir into 2 union territories, Union Territory of Jammu and Kashmir, Union Territory of Ladakh. So therefore 28 states plus 3 union territories with state legislature. 3 union territories with state legislature means they are union territories only, but they will function like a state. They are not completely under the control of central government. So 3 union territories with state legislature. What are the 3 union territories with state legislature? So Delhi, then Puducherry, Pondicherry, then Jammu and Kashmir. These are the 3 union territories with state legislature. For these 3 union territories with state legislature also, there will be assembly, chief minister, cabinet of minister, it functions like a state. So therefore, for these 28 states and 3 union territories put together, we will be having how many SGST Acts? 31 SGST Acts. How 31 SGST Acts? 28 states plus 3 union territories with state legislature, that is Delhi, Puducherry, Pondicherry and Jammu and Kashmir. 31 SGST Acts we have. Okay. Then next, UTGST Act. UTGST Act 2017. This UTGST Act we have only one, because UTGST is levied by home central government. How many central governments we have? Only one central government. So for which and all union territories this UTGST Act will be applicable? For 5 union territories, 5 union territories without state legislature. For 5 union territories without state legislature. What are the 5 union territories without state legislature? So we have Andaman. Okay, so Andaman and Nicobar Islands, then Lakshadweep, then Daman, Diu, Dadra. Previously it was separate. Daman and Diu was separate, Dadra and Nagar Haveli was separate, but now Daman, Diu, Dadra and Nagar Haveli. Next we have Chandigarh, then Ladakh. So these are the 5 union territories without state legislature. For these 5 union territories without state legislature, one act, UTGST Act, is only applicable. Okay. Then next, IGST Act. IGST Act 2017. How many IGST Acts we have? Only one IGST Act. Only one IGST Act, because IGST is levied by whom? Central government. So we have one IGST Act. So therefore, what are the various statutory laws that we have related to GST? We have CGST Act, 1 CGST Act, 31 SGST Acts, 1 UTGST Act and 1 IGST Act. Okay. In that IGST Act, few sections are applicable in our syllabus. Few sections for CA intermediate. Okay. Few sections we have in CA intermediate syllabus. And the remaining sections and all you will be learning at CA final. UTGST Act you don't have in syllabus. Okay. So not in syllabus. Reason being, UTGST Act is not something different. Whatever is there in CGST Act, if you copy paste it and change the state to union territory, it is UTGST Act. So it is not in syllabus. So you don't have to learn this UTGST Act. Then what about SGST Act? Same. SGST Act also not in syllabus. Not in syllabus. Again same reason, SGST Act is not something different. Whatever is there in CGST Act, copy paste and you will change central government to state government, that is SGST Act. CGST Act, few sections we have in CA intermediate. Few sections in CA inter, but remaining sections and all you will be learning at CA final level. So that is with respect to the statutory references related to GST. Okay. And in the next lecture, we will see the remaining information in segment 1.